we talked about the evolution of money. We went from the barter system of trading chickens for cows and vice versa. And then we evolved into trading commodities where it was spices and sugars and salts. And the Roman army used to get paid in salt, hence the word salary. That's where the word salary came from. Then we started doing coins like gold and silver, right? And we started trading in coins. And then the Roman Empire kind of messed that up because they started diluting the coins with tin. And instead of real gold, you had gold mixed with tin. And that led to the economic collapse of the Roman Empire. And then, we had the Tang dynasty in China where people would deposit gold into the bank. And then with your gold, you would get a certificate that said, hey, you have 10 gold coins. And you'd walk around the world and you'd trade with that piece of paper that says this is worth 10 gold coins. And you go buy some cows or go buy some chicken or go buy a plot of land. And your certificate that you held, which was backed by gold in the bank, so to speak, was worth something because you trusted in the bank. But little did you know that the bank was then taking your gold and issuing more certificates off your gold. So your gold, yes, it was your certificate that they gave you was backed by gold, right? Because your gold was in the bank, but then they started issuing more certificates with your gold, right? Because the idea was, hey, not everybody's going to withdraw the money from the bank at once, or not everybody's going to ask for their gold back from the bank at once. And so that was the idea. And that didn't work out so well because eventually there were bank runs all across the world that we've seen in many different parts of the world where banks go into failure. And from that idea back in the Tang dynasty came the fractional reserve lending system, where they weren't required by law in the US and other banks around the world. They're not required by law to hold your deposits on account. They can loan out 90% of your deposits. And that's called the fractional reserve lending system or banking system. And so that means there's a whole bunch of money floating around in the economy that $1,000 gets turned into 10,000,